Hey guys, Novice Unicorn here. I am a novice. I don't know anything about stock trading. I don't know anything about these equities, and you probably shouldn't even listen to me. But this is just my opinion, and I want to bring this opinion to you about something called I want to call it a principle of anticipation. It's extremely important when it comes to playing this game. I got flamed pretty hard for saying that the stock, AUPH was going to go lower. Um, I did have some miscalculations because of a conference that they were having today. I would have made a little bit different call, and the different call would be that there would be a pop before a sell-off. And that's based on the principle of anticipation. If you do not, this is not something you're going to look up, but it's something personally, it's something I look at and I've seen, and I'll show you a couple charts that exemplify this factor. This is a daily, and I did have some buys in here, and my sell was out here. I did sell a little early. I probably could have made another 7 or 8% on it for easy 7 or 8% on it, but that was when I was looking at the chart, not necessarily the you know factors, the outside factors, which would be the anticipation of news coming out on their presentation today at the Bloomberg conference. And I did listen to that presentation, and it reveals two principles, two sides of this principle. Number one, stocks will move on anticipation alone. Anticipation is a very strong factor. Anticipation is what moves stocks when a company raises guidance for the next quarter. Particularly, they beat the current quarter estimates and they raise for the next quarter. Uh, the raise for the next quarter, the entire move is based off anticipation. Okay, so anticipation is an extremely important factor. Like, you'll see noobs or whatever, people that don't know anything about stock trading, they'll say that it's sell the news, or they'll say stock XYZ is going through the roof, and you'll see a lot of chatter. But the important factor is to understand how the stock market uses anticipation. Major moves in the stock market are created by anticipation. And usually when those anticipated moments are validated, stocks sell off. Okay? Because the upward momentum is not created by meeting goals. The upward momentum is created by the anticipation of meeting goals. And so I'm going to show you a couple things here real quick. So if you look at this on the daily, I did sell at the top of the day yesterday here. I could have held a little longer and made, double my money, but double my money that I gained. But, I just looking at the chart, I didn't really calculate the anticipation level. And this is a good example of where I failed. Well, I made money, so it's not technically a failure, but you can never be upset about making gains. Many major stock investor or trader will say that be happy with the gains that you make, not the ones that you missed out on. So, but if you switch this over to a 5-minute chart, it's going to become very evident what I'm talking about. Extremely evident. Here's my sell, and now this is it. Always put the tick at the beginning of the day. I'm pretty sure I sold here at the end of the day because the price didn't get into this range until right about here. So I did sell at the end of the day here, and after hours you had somebody come in with heavy a short leaving or a long coming in or a mixture of both on anticipation. And then during the day here, you see I got flamed pretty hard saying this was going to go down. And granted, it did go up pretty good, about 8% from where I said it was. But you know what? It has come back down. And so my prediction was correct on that. But this entire move up here, and if we wanted to look at it, the entire move from this point up was anticipation. And then if you listen to the conference, basically said they were going to enter a 52-week new study, and 52 weeks is a long time. If you need to figure out how there's a subject of capital burn and or essentially the amount of money that can be lost, or the amount of gains that could be lost by waiting. And so when they come out saying there's going to be a 52-week trial and all this stuff, they are literally saying you are going to lose money while waiting. Not because you're going to lose money on the stock, but because your money could be put, used better elsewhere. And that is a serious factor in major players. And you need to become a major player, think like a major player. And so you had this massive drop off here. And I sure hope that people sold before that. Because here you have anticipation. And at the moment that nothing is going to happen from that anticipation, you have a sell-off. This textbook. There is no other factor. There is no other factor except for anticipation, failure of anticipation, and then the calculation of capital lost waiting. So there is no other factor in this situation. I'm going to switch over to Claro, and this is a micro situation. Don't look at the chart here, but all I want to show you is the last 2 hours of trading and what happened after hours. You had essentially a major sell-off for the stock for a while, and an uptrend right into the earnings release after hours. And this uptrend, well, here it is. This uptrend right here is caused by anticipation. There is anticipation from the shorts that they might report well, so they close out their positions on the long, winning downtrend. And there's anticipation by longs coming in saying that this thing should, beat or do something, whatever. But the thing to notice is that when that anticipation is met with reality, okay, there's no anticipation. Here you have anticipation, now you have reality. And you will see through this entire period posts, tweets, blah 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 of people that do not understand this principle. And this entire move here is based on the principle of anticipation. When a company says, like, the reason this tanked so hard, and I was in this, I did play this a little bit, I lost about 8% on this move, and it's because I neglected to calculate anticipation. Well, no, I was gambling on this one, but to be honest, but but the point being that regardless of my position, it's obvious to look back and look at this and say that there was anticipation by shorts getting out or longs getting in because of the ER, and then when the company said our June quarter is probably going to be 10%, reduced, and will probably be profitable in September quarter. That is definitely saying, hey, don't anticipate much from us for another 3 months. Or 6, if you really want to calculate. And boom, that's it. That's all. That's it. That's all you need. No anticipation, stock goes down. Here is a really good market-wide example. We're going to switch over to SPY. If you don't know, there's an interesting metric out there, or an interesting calculation based on how the S&P 500 reacts prior to an election event for presidency. And it has, I don't know the exact number, but it's over 90% accuracy. If the S&P 500 drops the week or 2 weeks or 3 weeks before an election, a major presidential election, the chances that it's got a 92 or 94% success rate within the last 100 years, that if there is a drop in the S&P 500 into an election day, then the incumbent or the current party is going to lose. So this drop was essentially saying that Donald Trump was going to win because the Democrats were in power with Obama, and this drop is essentially saying that the market felt that Obama was going to win. No, that Trump was going to win, and it's predicted almost every presidential election. But this is my point, how it ties in here. This drop was caused by the factoring in of a new regime in the White House, and that creates uncertainty. And uncertainty always creates negative cash flow. Uncertainty is always negative. It doesn't matter what it is. Uncertainty is always negative. Anticipation is always positive. And, well, anticipation of upside or of winning is anticipation of a bad event is not necessarily positive, but anticipation of something good happening, or a beat on earnings, or a raise on guidance, or a buyout speculation, probably one of the best. Anticipation on something positive happening always creates an uptrend, regardless of whether it's fundamentally valid or not. And so here you will see that this is another principle, and the fact that uncertainty always creates a downtrend. It doesn't matter what you're looking at. There's your downtrend, Trump wins, and there's your uptrend. And a lot of people will be like, well, it's because the election's blah, blah, blah. Half of it is because uncertainty has been removed from the market, because now we're over this period where we're hiring a new person into the White House. But on top of that, the anticipation that Trump is going to be a pro-business president created this massive uptrend. And you have to understand that through this massive uptrend, nothing changed. Some people will say, well, it's earnings, blah, blah, blah. Earnings are really good. Companies are doing better, blah, blah, blah. Okay. At least 50% of that move is off of anticipation. And this is market-wide S&P 500. Okay? So you can see that this is a fundamental across all stocks. Uncertainty creates downtrends. Anticipation creates uptrends, regardless of whether they're valid or not. So, when you were watching AUPH and everybody's saying this thing is worth $1 billion, which it's not, it's going to come back down probably here to, I got my, right here, 539. Strong resistance of 539. That's where I'm in. I'm looking right here. People say I'm crazy, and I could be wrong, but you know what? We'll see. But when you have a stock that moves on anticipation, and then nothing happens, and then on top of nothing happening, they say nothing's going to happen for 52 weeks. That's an anticipation buzzkill. And using this principle, think about where an anticipation buzzkill sends the price. So, the only thing that could prop this up, and I've looked and I'm not 100% sure on this, is if there's a lockout period on the shares that were purchased during the stock offering that happened on this day here. I don't know if I did not see a lockout period in the filing, and if there's not a lockout period, then this green support level is very thin, because that means that the institutions that bought in this range when the stock was up here could instantly sell within a week, a day, couple days, whatever. Then no lockout period, boom, we just sell it right over. And retail takes it in the butt while we made, 10%. So I don't know I do not know. I asked if I tried to find out if there was a lockout period on those shares, and I do not know on that. But if there's no lockout period, there is no support. So if anybody knows about a lockout period on those shares, feel free to comment and respond. I would appreciate that information because that changes the whole dynamic. You're still over 0 point on the MACD and indicator line. It's tentative, to say the least, and I feel the anticipation on the stock has been, the wind has been taken out of sails, because the 52-week trial period, on their current phase or their current study. So, and I don't know if they said on the presentation whether that was actually going to start. So, but the point being here is anticipation creates moves upward. Uncertainty creates moves downward. And it is across the board. So always keep that in mind when playing. Good luck, guys.